Hello and welcome to another update video about ADA. Here on the ADA chart, the wave count has not changed. So since the last update, obviously we talked about the support areas, they haven't shifted. We want to talk about them. Market in sell-off mode, what's going on? People panicking. I mean, we had yesterday, first of all, a substantial rally. Of course, we have to get a bit of a pullback. That's normal. It also indicates the underlying weakness in the market still. Yeah, it's quite a sharp pullback. I don't like it. I don't like the look of it. It certainly is very much in line with my idea that this is not impulsive to the upside, right? Stay focused, stay objective, guys. It is, yes, promising price action. However, the price has not been able to break above this green resistance level at $1.16, one of the key levels I've been highlighting over the recent weeks. We need to get above this level as well. So price got rejected. Price broke briefly above the February range, but got rejected as well. No, actually, we're still holding above the February range. I mean, see, this could be acting as potential structural support, I'm thinking, right? So the price, maybe like that. So the price broke above it. Oh, no, not this. Just need to grab the right one here. Come on. So, here, the 82.7 cent level. It's a previous breakout point. And maybe we come down to test it, which wouldn't be a problem. I mean, the main support here is 75.6 cents for me. Okay, that's support. Why is that support? Because we have a wave 1 to the upside. Well, that topped around the 3rd of February. We had a wave 2 to the downside. Wave 3 to the upside, I assume that's done. Wave 4 could be unfolding now, and then we might get a wave 5 for the next, obviously, 5-wave pattern. And the problem I have with this chart is that it's not impulsive. Right? I mentioned that many, many times. It's not impulsive in my opinion. Why? Because we can I mean, this might count as impulse here. Yeah, but it would likely just be the C wave looks impulsive, surely. Yeah, wave C of 3. But overall, it can't be, because the wave 1 is not an impulse. It's not even a 5-wave pattern, right? Now again, can I be wrong about that? Yes, but if you just look at this is not a 5-wave move. It might be 1, 2, 3, 4, 5, but wave 3 would be the shortest one. I measured it. So it would not be valid. Now, that being said, you get lots of distortions, when we have liquidation events. So, I mean, maybe I'm wrong, but a sharp pullback like that shouldn't really happen if this was a strong upside impulse. So it's very much in line with my thesis that this is just a diagonal pattern at best. So we have to give it space in the pullback, space all the way down to 75.6 cents, below which the yellow scenario will become less likely, and we have to again reinterpret. Okay, what else could it be if we break below 75.6 cents? It's just a corrective rally. We have to see. For now, what we're tracking, we were tracking a 1-2 setup. Price reacted great. It did it from where it needed to. Now we've rallied into resistance, and more important than the immediate upside breakout is always the pullback, because in this pullback here, and I've got 2 support areas we'll talk about now. But in this pullback, we will get a decision whether the bulls are actually strong enough to defend the support areas and to keep the overall uptrend that might have started actually here on the 3rd of February, to keep that alive. So if I zoom in a little bit further, then you can see 2 support areas. I mean, this is not so important. I've added it here with dotted lines. It's more of a weak support area where the A wave might find support. Then a B wave rally could happen, and a C wave down. This is just my view of the microstructure. And again, the wave 2 was quite long. Wave 4 might also be long. Is it going to be that long? I don't know. But it can be a few days, weeks maybe. So that being said, is it already circle wave 4? I mean, it's just support I'm showing you. It's not a prediction. It just is a chart with key support levels. So 75.6 cents for me is upside trend continuation support for this thesis, which is challenging to make because this chart is not very, very clear. We're not dealing with a very clear impulsive price action on the smaller time frame. However, I haven't given up on the bullish case, which is why I presented you with the 1-2 setup throughout February. Price rallied from there, and it did what it needed to do. And what I often say is, when you're trading these, I mean, assume a reward to risk ratio of 3, 4 maybe. So had you entered even just, I don't know, even in the middle of the range, I don't know, and it's now reached the top, I mean, it's pretty much a reward to risk ratio of 3. So this is what is realistic, right? You don't trade for a 10x or a 20x normally. So this was a setup that worked. Now we need to see if the price presents us with another 1-2 setup, or maybe when it comes down deep into support, it could be an interesting long trade because it would then be very close to a level where it will likely break. This is sort of my thinking. For now, we seem to be clearly in some kind of a consolidation, and this wave 4 has the potential to turn into a triangle or a flat correction, for example. That's at the moment my view. Overall, I'm looking for higher as long as the market holds above 75.6 cents. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.